Hey, what's up? This is Diggy here from ForexHabits.com. Today it is Friday, it is the 12th of April 2013, and it's just time for a little update during the week. Now, what we have is we've just been having these big rallies the last 2 weeks. So we've rallied up in the Euro US dollar from a low of 127.50, and we're currently trading at 131 again. You can see we actually had this big gap up at the beginning of the week, and we're heading towards kind of this 100 exponential moving average on the weekly, which is going to show, is it going to provide support, yes or no, which happens to be the high of this left kind of peak as well, at around 131.80. Now, the question is, are we going to break through there? If we break through there, then there's a chance of heading significantly higher towards 133, 135, and possibly higher. Don't forget, we still have this kind of trend line over here. So even if we do break through the 100, then we've got about the 133 level, and then eventually we've got this 135.50 level. If this does get broken, then there is a lot of room to the upside towards the 150. That's something that we're going to have to look at. If we look at the monthly chart, then you can see what we have here is we're still under the 21 moving average on the monthly, and this is around the 133 level. That's why I said that is the 50 EMA on the monthly chart. So if we do manage to get above there, then we got this trend line. So it's going to be interesting to see how the end of this month turns out on this Euro US dollar. For now, I would not touch it. I would just let it do whatever it's doing. It's kind of just rallying, and it's maybe going to consolidate, continue the rally if possible. At the moment, since the trend is looking so strong to the upside, it is possible to take some short long positions. Probably if it drops back to about 130.70, you could try a long with a stop just below 130.40, something like that. But what's even crazier is the Euro Japanese yen, which has just shot up since this 94 level back in 2012. It's just been rallying like crazy. We went up to 127 something, we dropped back down to this 21 EMA on the weekly chart. You can see how perfectly it just dropped down, pulled back down to this, and then shot back up. And that was at the end of last week, 119.50. End of last week it was around 125, and now it's trading at 130.60. It's already been 131. So this is just gapped up, and where can it go to? Well, if it does really continue with this exhaustion, then the obvious kind of next target would be around this level, this 138.50, 139, which is these tops of 2009. If it can get there in one go, sure, I guess it can, because this Euro Japanese yen, it just tends to move like crazy. If it will, I don't know. It might come back to close the gap. If it does that, there's a good chance to go long. It would be a smart trade. If it does close the gap at around 127.40, if it does come there, to take a long trade with maybe a 20 or 30 pip stop for the upside, which could be hundreds of pips to the upside. However, if it does just continue in one go, just sit it out, wait for it to get to around 139, and then try a short with a limited stop to the upside. Now, the same thing for the American markets. They have just been rallying, and we have just gotten this exhaustion. So we've finally gotten above this high of 1576, which was the all-time high. It was just the targets. If you look in the weekly chart, we've had that twice. We had a double top. So the first time was in about 2000, the second time was in 2007, 2008. We had this kind of double top around this 1577 level, and we've just been inching higher and higher and higher since that crash of 2008, 2009. We've just been going up, and we finally surpassed both those peaks. So the S&P 500 is at an all-time high in its history. It's just at the highest ever, and personally, I don't think it's far from another big crash to the downside. Now, as you can see, although we have surpassed this top, if you draw a trend line over the tops at around 1600, that would be kind of a top, which is exactly what we're into. We've been to about 1597 right now. We're trading at 1592. So, and you can see what's very important here is this negative divergence that's forming on the RSI, where yes, we're going higher and higher and higher in these tops, but we're going lower and lower and lower on the RSI, and that means that soon the price action is going to have to correct. It's going to have to pull back to its moving averages. It's going to have to go in the direction of the RSIs. So if that's going to happen here at 1600, or if it's going to go to 1620 or 1640, 1650, it's in the exhaustion phase. So we're just going to let it play, and we're going to let it do what it does. But as soon as it's starting to show signals of consolidation or signals of a top based on candlestick patterns, based on shorter time frame like 4-hourly kind of patterns, where it's going to show us that it's had enough and that it wants to go down, we are going to look to go short, because it's going to be very profitable when we get this crash to the downside. So we're going to be waiting for that. We're going to be careful. The same with the Nasdaq. I mean, that's also gone pretty high. It's at 2860. It's nowhere near an all-time high because we had the tech bubble in the 2000s, so it's never going to get anywhere there. That was about 4,000, somewhere around there. But you can see we are much higher than the 2008 high, even though, look at this on the RSI. In 2008, we were at this level. We were at about 73, and this 2008 level was 2300 roughly. Currently, we're trading at 2860, and the RSI is at 65. So that is not looking like a very positive kind of chart. That is looking like a chart that is just walking in its last legs. It's trying to do everything it can to make that little jump, to make that little last high before it's going to come crashing down. That's just my opinion based on the charts and based on the experience of these RSI divergences and what happens. Same with the Dow Jones. Dow Jones is incredibly high. I think this is at an all-time high, if I'm not mistaken. Yeah, it is at an all-time high, the Dow Jones, and this one is just running away like crazy. You can see this last little gap up on the weekly chart. It's just jumped. Everything's jumped. So yes, it may still continue. Yes, it may still go a couple percent higher. Yes, it may still take a few weeks, but we are busy with this final exhaustion phase, and we are not far from quite a good correction to the downside, in my opinion. And remember, you have this sell in May and go away. Yes, it's maybe a theory, but it does tend to happen. So since it's the 12th of April, somewhere in the next maybe 2 to 4 weeks, I think we should see the ultimate top in these markets for the foreseeable future, and we are going to start a significant correction to the downside. That's what I'm saying. So be careful with your shorts, because if you short too early and it still goes up a couple percent, it's going to squeeze you out. But at the same time, you want to keep watching this, and you want to try and get in on the short side in the next couple of weeks to try and ride that move to the downside. So that's all. Check out forexhabits.com. Be sure to subscribe for email updates. Subscribe to this YouTube channel so you get these updates as they come out. And if you're looking for personal Forex coaching or trading recommendations, check out forexhabits.com/coaching or for forexhabits.com/VIP. Cheers.